But then, a larger drop occurred, resulting in major pain for Bitcoin futures positions. Group psychology is playing a role here. Bitcoin tested the 78k level, rebounded slightly, then rose to around 87k and 88k, before falling again. So, it's important to monitor whether it touches the 78k line again. A key point to consider here is the 10-year US Treasury bond yield. Didn't see that coming, did you? If it moves past that and the 93k level, there may be hope for the markets. Crypto drought, can it get worse? Hello crypto sensors and welcome back to the channel. I hope you had a great weekend because crypto, well, not so much. This weekend, Bitcoin's price took a dip, showing a pretty negative trend hovering around the low 81k range. If it drops any further, we could be looking at a test of the previous lows. It's been a sharp decline to say the least. And it's not just crypto. Traditional markets also took a hit, with the Dow Jones closing 700 points lower as inflation and tariff fears intensified. So, without further ado, let's dive into the factors driving Bitcoin and the wider crypto market right now. Let us start with the technical wars. From a future perspective, Bitcoin had a poor performance over the weekend. While a one-way drop is difficult, you can observe that there were small declines followed by slight rebounds. But then, a larger drop occurred, resulting in major pain for Bitcoin futures positions. This has significantly affected Bitcoin spots and altcoins as well. When looking at short positions, you can see that there is a strong line forming around the 85k to 86k range, which is close to the previous short-term high. Group psychology is playing a role here. If we look at the bigger picture, there are strong short positions forming between the 85 and 89k levels. On the downside, there are notable positions around the 78k and 77k lines. This is where there could be strong contention as it's near the previous low. Since it is the low point, there is a possibility that we will see serious price battles at this level. Bitcoin tested the 78k level, rebounded slightly, then rose to around 87k and 88k, before falling again. So, it's important to monitor whether it touches the 78k line again. Above that, you should watch the 80k line to see if it holds, as this could mark an important point for a trend reversal. In the future markets, the price lines are forming in line with market flows. Bitcoin has seen increases between the 78k and 88k levels for the last weeks. The open interest, OI, in Bitcoin futures has been increasing as more people are trying to build positions. In the short term, this is something to be cautious about. Over the weekend, we saw some adjustments in the market which had previously been turbulent. The open interest is a key tool to track, especially when liquidity is low, as it can provide good insight into the market's direction. It is something we need to keep an eye on until liquidity is fully injected and until the market shows sign of a complete reversal. So, as I mentioned at the beginning of this video, the broader market is also struggling, with major falls in indices like the Nasdaq, Kospi, and Japanese stocks. A key point to consider here is the 10-year US Treasury bond yield. Didn't see that coming, did you? The price of this bond is very important, especially when it crosses 4.3%. There on the right. I don't want to sound redundant, but when it goes above 4.3%, Trump made many efforts to lower this rate, including his announcements on tariffs and creating fear. He has continually emphasized lowering bond yields. But this time, it is not going down, so Trump and his tariffs are shaking the market again. On Fridays, these parts are coming out higher than the PC's expectations due to inflation concern. Recently, the market became concerned about inflation after higher than expected PC, or personal consumption expenditure by the way, data, leading to worries about stagflation. This uncertainty, combined with the geopolitical tensions, has had a big impact on the markets, including cryptocurrencies. Regarding the tariffs starting on April 2nd, which will affect over 25 countries, we expect this will cause major disruptions across various markets, including the cryptocurrency markets, stock markets like Nikkei, and more. Goldman Sachs has also raised concerns, predicting that inflation could rise due to tariffs, further shaking up the markets. They also forecast that there will be 3 interest rate hikes in the near future, adding to the uncertainty. The market is undergoing a difficult period. With volatility similar to the 2008 financial crisis and the COVID-19 pandemic, we are currently navigating a rough market environment. Policy uncertainty is currently just above any crisis in modern US history, and we are seeing 80% higher uncertainty levels than 2008, but similar to the COVID-19 pandemic levels. And there too, this is the same information showing that we are navigating uncertain waters. As a result, market swings are widening and we expect an extremely volatile week. It's a tough time, but as the market finds stability, liquidity will start to flow and the market could recover. Due to this influence, the entire asset market fell by a huge amount. After Trump was elected and the Trump administration came into power, the transaction volume in the coin market fell by 70%. Not only the coin market, but all asset markets around the world were in an uproar. If you look at this, the daily volume increased significantly due to expectations of Trump. But now, the data is saying that we are going through a really difficult time, and the daily exchange volume is falling down at the same level as its pre-election level. Looking at M2 money supply, we are seeing some signs of improvements. The relationship between M2 money supply and market movements is strong. And as this liquidity grows, we could see positive changes in the markets. So, while the short-term outlook may seem grim, especially with testing previous lows and market volatility, medium to long-term trends are showing potential for recovery. The key will be monitoring the liquidity situation and the global economic environment. The current holding zone is somewhere near the bottom line, and the actual movement is also showing that movement. In fact, the reason why I emphasize the global M2 currency volume and the increase in currency volume and liquidity is that the money has not been released yet. In that case, Bitcoin has risen from bottom, and they are concerned that we have not yet entered a period of high exchange rates. For now, we need to keep a close eye on whether Bitcoin can hold the 92k to 93k range. See that red line? If it moves past that and the 92-93k level, there may be hope for the markets. But for now, the key is to observe the reaction around previous lows and how the market moves after testing these levels. And that's it for today's video. If you found this helpful, don't forget to like, subscribe and drop a comment below. Your opinion is always welcome. Stay sharp, stay informed, and as always, keep sensing the markets. Catch you in the next one. Bye bye.